Wait, is that right? Sorry, that was so lackluster. No, I can't. That's a curse. Only one totally per episode. One in the pack. After that, it's gone. I'm good. On my reflective vibes. A little, feeling militant. How are you doing? Hmm. Hmm. Yeah. Hella militant in these streets. Forget what you heard. Oh man. Let me see. I didn't even check in to see who was first or anything. All right, while you're working on the sound, let me say what's up to
Well, they
Hey
should be able to
D.
hear me now, so that should do it.
Wait, was D the first one on your end?
D was the first one, first, and this is actually the first time that we've seen that happen. So, check it out. Check it out. It's getting serious up in here. So, should we get started? Should we get started?
Wait, they still can't hear you.
They should be able to hear me now.
Y'all, can you hear
Yeah, they
my
said got it. They
screen?
got it. They
Okay, they
wait,
got
wait.
you.
They said that they can't hear me.
They said you're on mute. They can't hear you. No
What?
sound. Wait, can y'all hear me? Chivo said he can hear you.
You can hear. He can hear me.
Yep.
Okay. Okay. People are saying we're good now. You know how
Yep.
YouTube's chat is sometimes it's like it tends to have that lag, and then of course YouTube gives that lag anyway. So I guess that's letting us know there's like about a 10-second lag. We're like, I guess we're moving up in the world, Jolene, because we're like close to like cable networks where they give you that like that delay in time just in case they need to scrub something real quick.
Well, hopefully there won't be any of that.
Kill
Lord
the
have
feed! Kill the feed! Well, you know what? Let's just uh
mercy.
let's just transition on them again. And we're the same.
All right. So I don't know if you said the
I have not yet because people didn't hear me, but that's a good segue because if you haven't subscribed yet, go ahead and hit that subscribe button down below. And on top of that, if you like the content, which we hope that you do because we actually put our hearts and soul into this bad boy, go ahead and hit that like button. And on top of that, if you want to be in the know, just like D was the first person in the chat, and you know how some of y'all are the first ones when we do other things. And shout out to the team at Sector Sundays because they did the dang thing there. Go ahead and hit
yes.
that bell so that way you could be a part of the notification squad, aka the Cool Kids Club. So, Jolene, how are you? What's going on? What's good in these markets? I see that we both in
Yo.
army fatigue out here, so
Yeah.
it's not a
But
game.
I need Carl Hawkins to pipe down talking about why y'all dressed like Rambo.
Hey, I saw that too.
Oh man, that's cold. All right, so let's get into it. Oh wait, I didn't even do my customary greeting. My bad. Hold
I know.
up.
I was like, whoa.
Done. No, I always say, what does it, cousins? Jillian GC in the place to be. Let's talk about what happened in this market. So as you already know, it's quad witch week. So with that, we have contracts expiring left and right. And usually during this week, the market is usually down anyway. So before the week before is cool, and then the week of, from what we've experienced, there's some volatility and whatnot. So, okay, we got the Dow negative 292.06 points. S&P 500 was negative 25.06 points. The NASDAQ was negative 67.82 points. The VIX was down since the last time we came on camera to 17.96. We got the 10-year Treasury note coming in at 1.29%. So it's less than what it was the last time we were here, y'all. Heading over to sector performance. Shout out to Sector Sunday. As you know, there are 11 sectors. We track the top 3 and the bottom 3. Today, it doesn't even seem like we need to track because everything is red. Every single sector red on the day. We got health coming in at the top spot, tech, and then consumer discretionary holding down the bottom. We got industrials, financials, and energy. Y'all, we track these 11 sectors so we can see what that sector rotation is looking like. Heading on over to pick performance. As you know, you can head on over to our Instagram account at that come up series, and you can see what the picks are for the come up series. We have C Limited holding it down today. Last week, they were up by a lot. Like I think like
if it's
over
up, then it's up. Then it's up.
Almost over 7.5%. Well, today they're up 3.25%. So
yes, they were.
Shout out to C Limited. We got Zscaler coming in at the number 2 spot and Datadog. What do those have in common? Interesting. All right. Going to the looking at the bottom of the list, all in red, we got Eat, Lucid, and C-Web. C-Web was negative like 6% today, y'all. So it's looking like there are some deals. Now, before we came on camera, Mark and I were discussing, what was below the 50-day moving average and then what was below the 200-day moving average, just for kicks. And a lot of the list is above the 50-day and above the 200-day. So that's cool. But we definitely had some that were below. And when we see that some are below, this may be an opportunity for a good entry. Possibly you got to do your due diligence. But Mark, I want to talk a little bit about that. And I want to revisit XLK, the infamous day last year around this time when XLK,
like it's been officially a year. Can you believe it?
Yeah, it's been a year. I want to talk about.
It's like, that. Oh my God! It's like it's been a year, and we have just
been a year.
So first things first, before we get started, definitely want to send a special shout out for Ty. Welcome back, brother, from being deployed. Thank you for your service, brother. We love you. Welcome back. And on top of that, definitely want to send a special shout out to each and every single one of you cousins because you've done this for a year. You've been in your year-long position, or you've been in your 2-year-long position for a year. So we are actually hitting the anniversary period of that quadruple witching for many of y'all when you were getting started. So huge shout out to each and every single one of you. For each and every single one of you, throw a flower or a fire emoji or whatever it is that makes you happy. Go ahead and throw that in the chat because tonight we celebrate you, and good old come up series fashion. We're definitely gonna get tonight's episode cracking. So it's a war out here.
Elizabeth SB said, "Our cousinversary." How sweet.
Hey, has a nice little ring to it. See, we had a moment.
Yes. Shout out to y'all. Shout out to us. Really.
Yes. Shout out to us, the culture. We did that. We did.
We made it, y'all.
I was gonna say it in a different way from somebody else, but nah.
Okay.
Oh, and by the way, people are wondering about who's that in the back. Y'all not ready for the Book of Eli yet. Just let y'all know. Y'all not ready for the Book of Eli, but in due time, we're definitely gonna have an interesting episode, possibly on Thursday. So.
Yo, what is Eli watching in the background?
He's watching us.
That's hilarious. I didn't know what it was. I can't really see it.
He's watching us so that because everything's going on through my ear, so he can't hear you.
Oh, you definitely need to hear me. Okay, Eli, carry on. Well, there's going to be a delayed laughter.
It's going to be a delay.
Yo. Where do you want to talk about first?
I don't know, because I'm ready to come in hot today. So
can we just talk? Let's get XLK out of the way first.
All right, okay. Let's get XLK out of the way. Let me go ahead and pull up XLK the chart real quick.
Yeah, pull the chart up, but let me just read something about XLK. Hold up, y'all. Hold up.
Okay.
Hold up, hold up, hold up. Hold up, hold up, hold up.
Oh,
All right, here we go.
okay. We coming through with that energy.
So 1 year ago today, y'all, there was a phrase. The phrase was get in where you fit in. And there was some confusion about what that might have meant. And this is what it meant at that time. I wrote at 9:16 a.m. Okay, let me make this plain. Get in where you fit in means the following. Here are the facts. The highest strike XLK offers is $130 at the moment. The contract prices are higher than we all expected. At that time, they're like $16 and up per contract.
Yep.
What we know that this will only increase over time. As more strikes come, that's only going to raise the value of the bid. Get in where you fit in means you either buy today with what you know or wait and see what happens when more strikes are available.
Yep.
But it will increase the premium for that $130 strike. So I wish we had the harp, but we need to talk about this because back then, that was the first time that a 3-year leap contract was offered. The very first time ever. So there was a lot going on, a lot of the cuzzos got into that contract, including me. I paid at least $16, at least. Maybe actually, no, that's not true. I got in a little under 16. I think
that was
like
me. That I was me coming in at 16, and then I was averaging down the entire time.
So I did not average down. I kept mine, but I think what I ended up doing was because I still have January 2023s for a 130 strike. Mm-hmm. So yeah, I have that still. I think some of them I rolled to a 150 strike, which was cheaper and I got more, but then I kept a good portion of the 2023s. Now those 2023s have more than on my end doubled in value. Excuse me.
Wait! Don't tell, because I gotta show something.
Okay, show the receipts. Go ahead. Show the receipts, Mark.
Cue the receipts. Let's cue the
receipts. This is a
big
deal, y'all.
All right, so transition. All right, so what's up, y'all? So if you notice here, a while back I had set a placeholder here for XLK, because when XLK dropped, it dropped from on September 2nd, it dropped from 127 all the way down to 108. So when a lot of the cousins came in, so think about it like this. This was around the same time of, say, for example, when those dividends came out, and this was quadruple witching on September 21st of 2020. So technically the year anniversary comes, maybe possibly next week, but still a good position, especially if you were coming through. But either way, this is when 2-year contracts had made their way into the market for January 2023s. And it's funny because when we think about it, it's like even if you came in anywhere between this timeline, even on a bad entry, you ready for this, Jolene? You ready?
Mm-hmm. Mm-hmm.
Even on a bad day, look at where we at. 157. So we went from, even if you bought at the high, which was a 127, you went up a whole 50 points, or whole 50 points in XLK, which would have totaled out to a whole 50% in the stock in growth. And on top of that, you're probably sitting anywhere from about a 150 or 125% all the way up to about a 250% return currently right now in an XLK 130 January 2023. So it goes to show you exactly when you play the long game wins out better. So it's been kind of cool just to see, even on a correction, because during this time, we saw that the market had corrected 14, or the ETF itself had corrected 14.87%. To put it into perspective, this was at an RSI level of 83.98. So XLK was completely overbought. And then it came down over the next set of days all the way down to a 40, and then to settle off at around 39.63 and some change. And then of course like started to really pick up steam, and then some folks like also dollar cost averaged around here again during this time of November 2nd, and then boom, we off to the races.
Mm-hmm.
And since then, here we stand today, currently at 156 and some change. That is amazing. That is amazing.
It is.
So
And
shout outs to all of y'all.
I want to point out that there were two approaches during that time.
Yep.
So you all heard Mark say that he averaged down. You know,
Mhm.
I don't average down. It's really rare if I do. Like something major has had to happen in order for me to average down.
Mhm.
Instead, I rolled forward. I rolled to a higher strike. So there are different things that you can do. The reason why I rolled to a higher strike was at that time I was looking to see what I thought XLK might be doing around like a year from now. So I was thinking of more 2021, like what it might be doing. And so I rolled forward to a 150 and just held. Um, had I averaged down, you know, I didn't do a comparison to see like what the difference would be. But for me, in the way my psychology is set up, like that's what I needed to do in that moment. So Mark, can you talk about, you know, what you were thinking during that time?
Yeah, so I can actually kind of like walk everybody through that mental process while I go through the chart,
Mm-hmm.
because I tend to do this a lot. So essentially, when I come in, I'm like the type of person, either I'll go either all in on a position that I have a strong conviction for, and even if I have a strong conviction, if it's like not at 100%, let's say if it's at 80%. Now the XLK, when it dropped down to it was like down to 109, but I came in around like this range here at around the 120s and some change. So
Mm-hmm.
around this time, because mind you, I think it was like somewhere around in this day. I have to go back to the actual date of it, but I bought in and I was like, you know what? It feels good to buy it. I mean, honestly, like 100%, like I was around 90% conviction, and what would have taken me to 100% is if we weren't going through a midst of a correction. So I knew that there was still some downside. So what I did was I said, okay, hey, I'm going to deploy another 5% into this position because I already had a 100% allocation towards it anyways. So I was going to say, all right, well, I'm going to play about 90%, and then over the next set of days or whatever trading periods, I'm going to play, say, for example, pretty much deploy my capital by averaging into the position from the downside. And so that's what I did. Um,
Mm-hmm.
the conviction for me was like as we went through the correction, and when I started noticing that, okay, hey, we're kind of like bottoming out on this correction. All right, I felt good of averaging in at around these levels here, and then I kind of like waited just in case, because there were thoughts of a retest. And then
Mm-hmm.
when we started retesting, I don't think I came in directly at the bottom, but I think I came in around here before the full on retest was completed. So then by
When you
this time,
say here, what do you
huh?
mean when you say here? When you say here, what level are you talking about?
Oh, so where I'm talking about is, yeah, thank you for that. So
Mm-hmm.
it was around the level of about 119 and 115 when I came in to literally dollar cost average again with the final 5% of the 100% allocation of the portfolio. And so from there, at this point, by the time of November 2nd before election, I was already 100% deployed into XLK for that 130 call. Like at that
So
point,
you,
huh?
no, I'm sorry. Go ahead. Go ahead.
So pretty much at this point, I'm at 100% deployment. My conviction now is at 100% because of the fact that I saw that the market wanted to do a retest. We successfully retested. And then, of course, thank goodness for the election, because I think that we would have been in retest mode for a few more days. But
Mm-hmm.
after the election, it was pretty much off to the races, and it stayed the course. And essentially, yeah, I mean, it's paid off big time.
Yeah, I'm happy with, I'm happy with XLK. Again, XLK, that's the parent. You already know it's going to perform. It might take a little longer, but when XLK, the parent was away on vacay or whatever they were doing, I was like, ooh, let me take this Tesla situation for a spin. So instead of averaging down an XLK, which I could have did that, um, I instead put my money in Tesla for a scale play. That's why I call Tesla scale bait, because in that moment Tesla was clowning. Like, it did a really, really good job. Um, but we don't need to talk about scale plays because some of y'all don't have liquidity yet. So we need to like focus on
Focus.
brick by brick. Bring it in. Focus.
Yes. So, I mean, that's the beautiful thing about it when we think about long-term leaps. Like, I hope that many of the cousins are literally seeing that magic and how it works. I mean, not really magic, but the work behind it, where there's not very much work there. It's kind of like you said it, don't forget it, but essentially like let it do its thing over time, and then essentially boom, go for it. Now the funny thing is, on the anniversary of us getting ready to go through this, we're getting ready to go through another process, or we're probably in process of some of these things now. So it's like, okay, now here's another thing that if you notice about the XLK ETF. Does anybody notice anything about this chart? Well, like, especially if you're looking at it from if you're following at home, and you never know, some folks just listen to this thing just for audio. When you get the chance, if you're looking at the chart, pull up the XLK chart on a 1 year or a year to date basis, and then have your EMAs for 5, 21, 50, and 200-day moving average. Something that you'll notice about XLK is that you'll notice that XLK has yet to touch the 200-day moving average. So, for example, the last time it did that was during pretty much a crash. Like, the market had a crash. If you put it into perspective, like, what does a crash look like? This is what a crash looks like. When an ETF, an index fund ETF, drops by, over 30%. That's pretty much, you go from 5 to 10% correction, from 10 to 20%, that's bear market. From 20 to 30%, the stock has now crashed, especially if you're not accustomed to that type of movement. So in this regard, we normally don't see XLK come down to its 200-day moving average very often, especially when you have those types of highs. The last time we did that was back in June of 2019, and then of course the fall of in 2018 at the end of the year. So if you think about it, normally the ETF, for it to go through its correction, it's probably going to come down and trade around the 50-day EMA or 50-day moving average, and then from there it pretty much goes back into the swing of things. It's funny because you can look at the S&P 500 and you kind of start to see the same things as well.
Nice.
And I just noticed that I did that without even showing a chart. So
I just sent that message. Like, y'all hear the chart?
I'm getting accustomed to this system. So just to quickly run through it again, you see this drop in, say, for example, March of 2020, where we dropped about 34%. Then, of course, you see the same thing in, which was, a sad day for me. I try not to rehash this one, but this is the year that I do not like to speak of, where it dropped by 24%. So bear market territory, going into really crash at the end of the year. And then anything outside of that, it's like, again, you see these little misnomers where you see these great runs in a stock. And then essentially from there, it's like, okay, every now and then you'll see these moments. Like, this is 2016, this is 2015. And this is around like the timeline of, let's say, those August to Octobers. This is back in the day where trading and investing was different. But there's something to be said about where we are today and how the landscape of investing and trading has also changed. So wanted to put that out there. But we'll get into that in a little bit for today's episode.
Yes, because that was a request, so cool.
Yeah.
So Mark, the title of the show.
Yes.
If you put the title that we talked about earlier, let me double check.
Yes, I did.
All right, market signals, noise, and confirmation. Let's talk about it.
Okay. So one of the things that is like, if we've been at this thing for a year now, and it's like,
Mhm.
I want people to start kind of like thinking a little bit further, because, you know, again, we here at the Come Up Stories, we look at ourselves as like the standard for where is it that the knowledge can truly come from. And so it's like we think that, you know, this is pretty dope in the sense of being able to give these types of things to you so that way it's like it better helps equip you in moving forward. So you've heard these things called signals, you've heard these things called noise, and then on top of that you heard these things called confirmation. Now some of you may think about confirmations when you think about it from a technical analysis. If that's what you're thinking, great. If you're thinking about signals and technical analysis, great. If you're thinking about noise and technical analysis, slightly great. Let me break it down for you. These are all the ways in which that you can use to your benefit to literally help you spot opportunities within the market for you to take advantage of. So for example, when we think about like the things in which that we use as predictors of market performance, a lot of times traders or investors look at things like momentum. And then, so when we think about momentum, we're thinking about, like, for example, if you look at volume, if volume is starting to climb, actually, let's just go to charts. I have a feeling I'm just going to geek out today. So let's just, you down for it, Jolene?
Yep. Do what
All
you
right,
gotta do,
so
brother.
we're going to just look at the chart today. And I'm going to just keep it simple for everybody and just use straight up the SPY. Now, of course, I'm going to get to this later. So actually, I'm going to use a totally different ticker. I'm going to use Visa for today. Now, notice
Yeah.
what I have here on my chart. I have pretty much everything from an RSI to a 200-day moving average, the volume, and 3 EMAs. Keeping it
Mhm.
super duper simple, not adding in any extra like the VWAP and all this other stuff. And I mean, no TTM squeeze, none of that. I'm just literally looking at the market just from a purely basic and vanilla format chart. So let me explain. When I look at momentum, right, I look at, say, for example, things like volume. So, for example, if I'm looking at a potential downturn, I can see that, for example, if I'm looking at the average volume going to the downside, I can set my benchmark here, which is, or the benchmark here where the last green day was, and then moving forward, how many days of red have actually gone above that. Now, notice here when I start seeing, okay, hey, we peaked, we're still above it, and then of course we have some days of light, but then at the same token we pick up, and we're still heading towards a downward trend. This is telling me that there's still a significant amount of sellers' momentum that was in the stock, and ultimately it's indicative of what we see for Visa. Now, of course, on the flip side, before we saw all of that, we saw significant volume that was just showing us a trend that there was significant buyers there. And then, of course, we had our few misnomers of selling, or they were potential precursors. And then, of course, we had our final run of, say, for example, buying on the side of, say, for example, the stock. Now, the reason why I put that out there is because it's just showing you where the momentum is, where the market is going, and also essentially people are buying. But notice you start to see as we come to the end, you see that we're coming down on the volume of buying. So, what does that tell us? That's letting us know that we're getting to a place where maybe, just maybe, people aren't finding this stock as valuable as they once thought it to be, or maybe it's reached a point in which that it's time to move on from the stock, or maybe they want to take profit. So what do? We look at things, we look at other things. When we start, say for example, going to the downside, we start looking
Mhm.
for, we start searching for value. And this is really where the part where you as the investor think about it like this from the perspective. If you see, say for example, a home that, like, say for example, if all home values have dropped or if they're dropping, are you going to wait for, say for example, for you to get the very best value? Or actually, let's just remove real estate. We're going to go even super basic today.
Okay.
Let's think about it from a perspective of an elevator. So let's say that we start on elevator floor 10 and we're trying to get to floor 1, which is the lobby. Now, of course, you can't predict exactly how much time it's going to take you to get from floor 10 to the lobby. You can't predict it unless you're just that super duper awesome, and if you are, kudos to you. But what happens is from floor 10 to floor 5, are you going to be the person that finds value there? Because no, you're not. because of the fact is you're not that close to the lobby. So naturally what you're going to start doing is getting a little bit antsy to get out between floors 5 and the lobby. Now, of course, the cheat code is that you can see the indicator to let you know that, okay, hey, we're close to the lobby. But if you didn't have the sign and if you couldn't tell, then ultimately you kind of have to wing it. So that's ultimately what you're looking at when you see the market. You see that there's activity taking place, but honestly, you can't really see exactly like, okay, hey, where am I going next? If that was the case, every investor, every trader out there would literally be 100% perfect in the market. So naturally what investors and traders will do is they'll wait till they get to like level 5 to between level 5 and level 1 and say, okay, hey, this I'm comfortable of getting out. Now normally, or I'm looking at getting in. So when you think about like sell-offs, you see like elevator drops. The market drops in elevator form, but goes back up in stair-step form. So I'll repeat that. The market goes down in elevator form, but comes back up in stair steps. But here's the question. If you had to, say, for example, go all the way up to floor 10, which most folks want to take the elevator, but are you willing to take the stairs from floor 1 to floor 10? Would you, Jolie?
I mean, if I still need to close my rings, then yes, I will take the stairs.
But it's like, but most folks won't, right? Most folks won't.
Right.
And that's the thing. You can't take the market in the same type of mindset and ideals as, say, for example, you can't look at the market in the same elevator format of going up just as much as it goes down. It doesn't work that way. When you think about wealth, wealth is being built just like, say, for example, when you think about stair steps. It's a process of each and every single day going up an upward trend. If you look at XLK, it had its dips, it had its elevator drops, but in the grand scheme of things, it had its stair steps going all the way up. Now, when we look at signals, we look at things in the sense of, we look at it from a standpoint of like data points, data entry points. So, for example, let's go back to our friend the chart here. I'm gonna transition this.
Wait,
So we're
Mark,
coming.
Before you say that, for the visual learners, I just want to say when Mark says elevator, like when you look at the chart, it legit looks like a diagonal or straight line.
I'm about to show you. So this right here would be considered an elevator, where you see a long body candle, and this is on a daily. When you see a long body candle, and say, for example, a few wicks. So imagine the wicks of the candle where somebody essentially either was in the position and they ultimately got out somewhere in the body, or let's just keep it simple in the format of just like, here you see just a significant dip that takes up, say, for example, X amount of days that it would take in order for this to go up. So if we look at it from 1, 2, 3, about 4 days worth of movement came down in, say, for example, 1 day chart. So that's the funny part of it, like when you see the market. Now, of course, you probably have been trained to see this as a signal. When you see a long body candle like that, 9 times out of 10, you're seeing some type of institutional movement or some type of volume. And you probably won't see that in, say, for example, a long wick candle in a daily. But when you look at it from say, for example, a day chart, then it really starts to show you. Like, for example, even on a green candle, you see these long bodies. That's 9 times out of 10 somebody's making a significant amount of a volume on a purchase, but that's for a whole nother day. So we've got a signal here. We can look at signals on both a fundamental standpoint, and we can look at it on, say, for example, a technical standpoint. A signal can tell us, say, for example, like something as simple as 3 white soldiers coming up from, say, for example, a downward trend. So, for example, we have 3 white soldiers here. Or we have, say, for example, formulating of 3 black crows. So where you have 3, say, for example, 3 red candles that lets us know that, okay, hey, going down in a downward fashion pattern that lets us know that we're leaving this position. We're ultimately going into a sell-off. Very simple. But that's just a small signal. But there are, say, for example, strong signals, and then there could be weak signals. Like, for example, let's take the the elephant in the room today. Let's look at Apple, just to make it very, very simple for everybody.
I thought we were talking about a different elephant.
Yeah, I could have gone there, but we're not gonna do that.
Okay.
But let's take Apple for example. Now there were signals going out before Apple's event today that there was talks about them being in, say for example, a deal with a supplier for satellite capability within their iPhones. And then that stock that was a partner literally just said, okay, hey, we're just gonna we're gonna literally buy on this stock because of the fact that that's a big opportunity for such a company, right? And then Apple announced today, and that's where your confirmation came into play, which was a lack of a confirmation, and the stock tanked.
Mm.
The stock literally just tanked. And the reason why is because what was first considered a signal ultimately became noise. And a lot of times we tend to hear a lot, like when you, the beautiful thing I love about my experience in trading and investing is when I first started out, given that there wasn't many people to talk to, there wasn't that much noise. Like I didn't have to deal with so much noise. I didn't have to deal with, everybody around me talking. Now it's like you've got a ton of content that's coming out on YouTube. You have a ton of content that's coming out on social media. Then on top of that, you have stuff that's coming out on shows that are syndicated in programming. And it's kind of hard to tell, okay, well, is this real? Is this a real signal or is this noise? And we tend to find ourselves in that process of trying to confirm. Well, here's how you could tell. A signal would be like, say, for example, you studied up on the fundamentals of a company, so you know exactly what they do. You know their company in from top to bottom, so you know them in and out. You know the skeletal structure, and their skin structure. You know what they're good at. You know where they're going. You know who their competitors are. You know them. And then so any rumor that you hear or any leak out there, you can kind of like take it with a grain of salt, and you can say, okay, hey, I could see this on the horizon. On the other side, my BS meter is ringing right now. So I'm going to literally just leave that to the wayside. For example, I'll take it back to the Apple example since today was Apple's event. So if you think about it, Apple could have had satellite infrastructure in its cell phones from a long time ago. This technology is not new. It's been around for a while. And on top of that, there have been other entities that have had satellite connections within their phones, mostly like places like, for example, military and stuff like that. But it's like, the question is, why would Apple in 2021, all of a sudden, given that you have a 5G networks infrastructure that is literally still booming and everything else, why would you go to satellite? It doesn't make any sense. It just doesn't make any sense. So it doesn't even fit the model of what the plan is. So for a person who's seasoned, you're thinking, okay, this is noise. But when you have everybody in every which way creating an article, especially from reputable sources, and then on top of that, your pundits on TV that are talking about it, then it starts to feel like maybe this is actually a signal, when in reality, it's still just noise. And that's one of the glorious things about, say, for example, the market, that you have to consistently filter between signal and noise. And this is the trick that you can use. If it's real news, it comes from the company with the confirmation. When you hear them, when it comes to comment. If it's real news, we've always known a company like Apple or any other company, you see press releases.
Mm-hmm.
You hear them from the companies themselves. They talk about it. They make the announcement. For example, AMD connecting with Samsung. That's actual news that's been confirmed. Why? Because Samsung themselves have confirmed it. That's your confirmation.
Mm-hmm.
Neither one of these companies had confirmed it. So essentially, you had investors out there sitting back and holding the bag because of the fact that, okay, hey, I'm trading on something that I think is a signal, but in reality, it's actually noise. And it happens on a consistent basis. And no trader, no investor out there is exempt from it. I mean, you're going to run into it somehow, some way, regardless, some shape, form, or fashion. Like, for example, a signal could be that, for example, people are expecting that Square will enter the S&P 500. That's a signal, but is it noise? Because one of the things that's also being said is Square is also facing some trouble because of the fact that they have a two class share system in the S&P 500. Abolished that as it pertains to you getting into the S&P 500 back in 2017 when they voted, which is kind of holding Square at bay. There's your confirmation because it was voted on and it became news within press release. They did that to stop companies from acting like Facebook and Google.
Mm.
So it's like, in order for that to happen, either Square has to get a pass, or say, for example, they're going to have to change their structure, their class structure for their shares. Will they do it? We don't know. We'll wait for the confirmation for that to take place. So when we think about, say, for example, things that take place within the market, and looking at an apple, you can see the same thing. So how do we look at confirmations? Well, you can spot some confirmations here, right? You can spot places and where investors start to seek in, they start to come in for value. How do we know this? Well, one of the things that you can look at is you have this 200-day moving average, which is pretty much a benchmark for everybody to realize, okay, hey, it's kind of like it's like a wellness indicator of, okay, hey, this is kind of like the last line. This is like at a price where it's so attractive. Like, let's put it into perspective. Apple's currently trading at 148. If Apple came all the way down to 133, you're telling me that you wouldn't be a buyer of Apple? I mean, you wouldn't. I'm probably sure that if Apple came down to 133, Apple's buying, Berkshire Hathaway's buying, and so many others. Because why? Think about, like, if that was the case, look at how many times Apple, say for example, doesn't sit on its 200-day moving average forever. It tends to just bounce off of the 200-day moving average. And then sometimes it drifts below when we see those crashes, but it doesn't last there forever. Why? Because somebody's buying. How do we know this? Look at the volume.
Mm-hmm.
The volume is skyrocketed. If you're looking at my chart right now, you see that I have the dotted line where it sits at about a 45.8. Well, it sits at about 162 million shares on average, which is the range. So anything above that is letting you know that essentially that there is a high amount of, say, for example, loading up or buying and selling that's taking place in tandem. Because when you see these green lines in volume, that's not meaning that, say, for example, everybody that day is just a buyer. That just means that there were more buyers than there were sellers. But ultimately, that's the aggregate of volume. It just means that that day was green and there was more buyers that day. You know, that's the perspective right there. You know, it's just a matter of essentially looking at it for signals. Here's another signal that you can look at. We look at this thing called the RSI, the Relative Strength Index, right? The Relative Strength Index gives you a range between 30 and 70. Sometimes it goes above, like, for example, like you can see that we got all the way up to about 81 here. And notice, you start to see signals. And then on top of that, you start to see trends. And then you see confirmations. How do we do it? I'll literally get rid of the entire chart of Apple. So literally what you are looking at right here is the entire chart of Apple. We are looking at Apple, the RSI chart. There is no star chart here. You're just looking at the RSI. So check this out. Apple currently right now is sitting at RSI of 45. So if anything, we're going to come down to this 44, which is not that far away. You probably may see that happen, if anything, tomorrow or sometime this week due to volatility, where Apple will come down to it. If it breaks that, then the next level I'll be looking at, like every other investor, will probably be around the 41, and then ultimately coming at some of the last line of defenses, which is around really this level of about 38. Now, if it comes all the way down here, then this is completely oversold. And noticing this is like a range in which that you just see a significant drop. This is correction.
Mm.
So it's like if I'm looking at it from, say, for example, a year to date or a 1-year chart, I mean, I can literally just look at it and say, okay, hey, well, I've seen behavior before. I don't suspect that Apple will break this. And it's just pretty much remaining trite and true to what is it that you know. And it's like when you start looking at it over a consistent basis as it pertains to time, you start to see, again, you start to see trends. Now, of course, you can look all the way back to 2020, but 2020 doesn't really apply here because of the fact that it's a whole new year. It's literally a whole new year. So when you start looking at charts, it's like these are the areas in which that you start looking at the trends and saying, these are things in which I could say, okay, hey, these are signals. These are signals, and ultimately the confirmation is the validation. So when you think about any chart, you look for it in the sense of, okay, hey, show me the signal, and then show me the confirmation. I got to block out the noise. I got to block out the noise of everything else and just focus on finding the signal. And I need the right signal. I need a strong signal, not a weak signal, a strong signal. Because many times in the life of investors, people will go off of weak signals and then ultimately wonder why they're being left high and dry. Because weak signals don't really give you strong confirmations. I'll say it to you again. Weak signals don't provide you strong confirmations.
And it's also important to have multiple like indicators
Correct.
indicating and confirming what one is saying.
Correct.
It reminds me of law school. It's like the weight of the evidence. Like, what standard are you going to use for that?
And it's the same process across the board in which that ultimately when you develop that, you develop a strong sense of conviction also. You just develop a strong sense of conviction for what it is that you're doing. You know, it's like, you know, people wonder, it's like, okay, hey, like for example, is AMD going to drop? Is AMD going to drop? Well, AMD came all the way down to its 50-day moving average. AMD has been pinging its 50-day moving average for quite some time throughout the year. Now, did it inverse? Oh, yes. But when we look at it in the grand scheme of things, and this is where we have to look at it in the sense of, if you're only looking at it from a chart basis, and if you're basing this off of just purely a chart, you got to ask yourself here, well, what caused all of this energy to take place from February 16th all the way to, let's say, June 1st? What happened during this period of time? Because if you're just looking at it from one piece, you're saying, all right, well, you know, I can just literally just look at this chart and just know it. But, I mean, without having the fundamental knowledge gives you the context. Like, that's the thing. That's like saying that, okay, hey, that, you know, LeBron James is the greatest of all time. Without any context, then I will not know exactly what you're talking about. Or saying if MJ is the greatest of all time, whichever one you choose. Without the proper context, if you're saying that MJ is the greatest of all time in baseball, if you're giving it to me in that context, I'm definitely going to be giving you the side eye and ultimately just turn around and be like, okay, hey, you need help. But if you have the proper context, which knowing a company inside and out, knowing what they're made of, knowing their DNA, knowing their skeletal system of what makes them who they are, that tells you something. That tells you something. That tells you something that what a chart can't. When you see any type of economic data that comes forth, you will know how it impacts such company. And it's like you're not going to be shaken. But when you don't have that information, then everything around you looks like a signal. And if everything around you is a signal, if you like imagine it like this, if everything around you is a signal, then how do you expect to have a clear connection? Because you're going to be pinging into every other connection thinking that they're the strong signal and ultimately not getting anything. And sooner or later, you're going to have nothing but interference. And interference does nothing but creates noise. I yield my time for now.
We have questions.
Let's do it.
All right, hold on. Let me pull them up right quick. So, let me see. These questions are all over the place. I did ask for non-Googleable questions, so
Okay.
we're gonna see what this is looking like.
Say that one more time. I'm sorry.
Will Apple be able to commit to reducing the company's carbon footprint by 2030?
I think it's very possible. If anybody understands how Apple really gets away with doing a lot of stuff,
Mm-hmm.
interesting thing about this is, um, here's a funny fact. If you look at Apple's devices, so a lot of the things and the elements that we see within these devices look very familiar. Like, for example, iPhone 4 and different pieces of that. What Apple does is they will recycle their phones, repackage them, and either send them out to developing countries, or what they will also do is they may take the material and just completely dismantle their phones and literally bring some of that same technology or existing technology into brand new phones. So they have this cycle of keeping things going without having to go so heavily deep or go deeply into the earth. That is super duper amazing right there. So
Mm-hmm.
do they have an opportunity to be one of those companies that does such a thing? I think so. And I think that, it's like I think that they're strongly on their way, and I think that they are way ahead of a vast portion of their entire industry as it pertains to the recyclable materials that they're using for, literally like, all right, well, think about it. We just use recycled plastic to create, the part of the antenna that sits on the side of the phone. Who would have ever thought of that? Like taking stuff from like plastic bottles to recreate. I think that they're definitely on their way.
So we have a question. Well, there was the one question about 2018. So I want to save that for the end because I don't know if we necessarily went over it enough.
Okay.
All right. So now these other questions, we'll just call this lightning round because this is kind of quick.
Okay.
Will the financial sector benefit from tapering?
Say that again.
Will the financial sector benefit from tapering?
It could. I mean, they're not the only ones that can benefit. I think that a vast portion of sectors can benefit from tapering.
Is buy now, pay later a threat to Visa, MasterCard, as well as card issuing banks?
No, because ultimately Visa and MasterCard, they make their money off of transactions. So essentially, if you have buy now, pay later, one transaction to ultimately pay for it, and then ultimately significant fees that go back to paying off your credit card or whatever, or just paying off the credit. And a lot of times people will either use Visa or MasterCard in order to make that happen.
Okay. Let me see. Sorry, those are kind of funny. Okay. Intuit buying MailChimp. Is it a move for the large amount of customer data?
Yeah, I mean, in this move is definitely in the amount of large customer data because of the fact that Mailchimp, to put it into perspective, when I was getting up and going as an entrepreneur and our startup, we significantly used Mailchimp to essentially capture data from folks to literally get like newsletters and everything else out, and that data became so valuable because of the fact of what you learn, phone numbers, birth dates, and everything else, whatever they wanted to give you, and email addresses. And then just thinking about like how is it that they've just evolved over the years. It's definitely the modern day energy play, which data is now the new oil, for now. Um, and so I think that that alongside with a mixture of, well, where else is Mailchimp's opportunity to really scale their business? Unless they decided to come like the ultimate marketing platform that compete against, say, for example, a Salesforce, but I don't think that they are willing to put the tech behind that. So I think that, honestly, it was a good play. I think it was more so a mercy play for Mailchimp, the company.
Say more.
And well, I mean, if you realize that essentially that the writing is on the wall, that there's only so much further that you can go as it pertains to scaling, and if you think about this S curve of innovation, You
Mhm.
know, MailChimp hasn't really done that much as it pertains to reinventing themselves in the marketplace of marketing. And so essentially it's like, all right, well, they have all this legacy data and still folks that use it on a small scale. But when you think about the grand scheme of things, there's other competitors that are within its space that not only provide what MailChimp does, but also does more.
Mm.
And so it's like, then on top of that, that's what gave life to other platforms like CRM, customer relationship management. So it just makes all the sense in the world that essentially that, MailChimp was going to be acquired.
Well, kudos to them. They didn't take no money from anybody. They pretty much bootstrapped. And
Yep.
also, it's like everybody back in the day had a
Use the
MailChimp or
MailChimp.
something. Yeah. So, I mean, congratulations to them for,
Yeah.
you know, working hard and then boom, selling.
Yeah, and I want to make sure that I'm clear there. It's like
Good.
I'm not throwing shade at MailChimp at all. It's just, that's just me putting on my venture capital hat and saying, okay, hey, well, where do you scale from here? Like, I challenge
Mhm.
everybody to start looking at startups. Like, go and, if you really want to get a perspective, really go and start researching startups on TechCrunch and VentureBeat and reading up on those companies, see who's getting funded, see who got funded, and then find out when's the next time you're gonna, and then put a 6 month timer on it to see if you hear anything
Mhm.
about them. Because 9 times out of 10, you won't. You won't hear anything else about them. And the question is, it's like at that point, if you want good exercise for being able to kind of like look to the future, really start looking at those companies and seeing what is it that they do, and ask yourself with the funding that typically goes over, let's say, a 12 to 18 month burn rate. So pretty much you burn cash every month. That's a burn rate. And the
Mhm.
rate of how much you burn. So if you're burning $10,000 a month, multiply that times 12 or 18. That's how much money you ultimately spent towards something. And then figure out exactly like, okay, hey, is there a real strong upside for this company and where are they going? It'll give you some great perspective. The
So
second
we
one
have
was,
one.
just as a heads up, it was TechCrunch and VentureBeat.
Mhm. Okay. So for the last question, since and we had our last minute, this question was about comparing the similarities between 2018 and now, as far as the character of the market and what's going on.
Uh-huh.
And then further, yeah, that was the main thing.
Yo, this is the last time that we're going to rehash these 2018 wounds for me.
Hey, that's what the people want.
Wow. Okay, so let's look at the chart from, let's say, I'm going to go on a 5 year basis because I
Mhm.
strongly believe that you can see some pretty good, interesting trends on a 5 year basis. So looking forward, 2018. Here we are in 2018 from pretty much January all the way up. So a lot of folks are thinking that we're gonna see this type of behavior. I'm more so in the camp of probably saying I don't think that this is gonna happen anymore on the 2018 data, because of the fact that when we think about this is around the time that the yield curve inversion like really started to take place, shape, form, and fashion, which ultimately started to spook the market. So you saw everything pretty much drop, um, and we didn't really have significant choppiness that year. We had some moments, and I guess to do it better justice, let me go ahead and pull it up, the SPY on a 5 year, so that way we can have some perspective. So if I'm looking at the SPY here from 2018 January, so here's how we started. We actually came down that at the beginning of 2018. And we kind of like traded towards the downside all the way to April. Now, of course, you can see certain parts of it, but if you think about it, you know, look at the amount of, say, for example, stuff that we had over a 52-week basis. So, honestly, I wouldn't say that we're more like 2018 per se. I would say that we're more like, because this wasn't really choppy. This was more so in the sense of investors really being spooked.
Mm.
Like, this was a spooked market where we started off to the downside, and then essentially we only came back up to like really, just a little bit above, the flat line. And then once we had the opportunity of going higher, because we started here, once we had the opportunity to go higher, then we just literally dropped. If you look at, say, for example, where we are today, look at where we are in the S&P 500. This is us from 2021 starting here, and we just been still on an upward climb. So we're still in the midst of an expansion. So I guess the best way to think about it is, and I'll send this as homework to folks, is look for areas in which that you can spot a market that was choppy. Like, for example, you can look towards 2011, 2013, 2014, where the markets were a little bit spooked from potential tapering and the tapering of Fed Chairman Ben Bernanke. Those could possibly be areas and arenas in which that we could see that, okay, hey, that, there's opportunity here. But for the most part, yeah, I wouldn't say it's 2018. 2018 was pretty much an all-out bloodbath, and we should have known that it was coming because of the fact that, people were talking about something that was happening throughout the entire year, and it kept the market really honest, and that was the yield curve inversion.
All right. And that's our time. 3 minutes extra.
What?
Thank you for that. Thank you for that.
Not a problem. It's always a somber moment for me to go back and, have those, like, those flashbacks and think about those days of 2018.
I know. That's why I appreciate you going over it, Thank you.
Okay.
I appreciate it. It was,
Well, here's an interesting thing. Like, I would say this for some homework. Find an ETF, an index fund ETF, by the way, that actually, like, found itself on the 200-day moving average. And how many times has it pinged the 200-day moving average in the last 5 years? Like, that's some homework for y'all. So let me repeat that. Find an index fund or an index ETF, or you can just go with the, some other ETFs out there. Find an ETF that has literally, over the 5-year span, how many times has it pinged the 200-day moving average versus the 50-day moving average?
Okay.
It'll show you some things.
All right, 5 minutes extra. Taco Tuesday.
Oh, my bad. Well, y'all, thank you so much for rocking with us, and like hopefully you caught some information. I know that this was a lot to take in since we're talking about signals, noise, and confirmation. I know, I get it. I mean, it's a lot to take in, but I promise you, once you start thinking about it in the sense of kind of like doing the breakdown of determining what's a signal, what is noise, and what is confirmation, I guarantee you your outlook on the market and also your confidence will significantly be boosted. So just continue to keep practicing, keep learning, keep researching, because you know what we say, the more you learn, the more you earn. Until next time, I'm Mark Monroe.
And I'm Jolene GC, in the place to be.
And by the way, butter is right there. And this has been your come up. We will see you on Thursday. And I'm just gonna say Thursday's gonna be lit. We'll see y'all then.